their most important metric is something called MOIC, multiples on invested capital.
You know, I've been owned by PE. It wasn't easy. I've run now like a VC backed companies, worked at Amazon. So I've sort of seen, like the three dimensions. And I've also had a company that wasn't, backed by investors at all. What is in your experience at the level of execution, right? For the executives, like they have to execute strategies, the difference with PE-backed companies versus
Well,
like VC-backed versus like public companies, etc.
well, first of all, PE-backed companies are probably profitable. They're probably bigger, maybe 200 million. I work in upper middle market, 200 million, let's say, into the billions. And they generally have a 5 to 7 year time frame for what they call value creation. And so their most important metric is something called MOIC, multiples on invested capital. They want to get a return on their investment and maximize that return. And usually during those 5 to 7 years, if they get on at the beginning of the cycle, they have a value creation plan. The first year, they need to show some quick impact. And so there'll be a lot of pressure to make sure there's a revenue engine that's working and they can show some impact from their investment the first year. And then kind of in the middle, they're building infrastructure, people, process, technology, data, analytics, brand equity, pricing. And they're building all those things up to grow the company, not just on a short-term basis with new logos, but on a long-term basis with retention, metrics like net revenue retention, lifetime value, all of those things we were talking about before. And then in the third phase, they're dressing the company up for sale. So branding is really important again, and making the asset look really attractive, either for an IPO or for a larger, maybe another PE firm to buy. To buy, they may do some costs down to goose profitability a little bit, but the good ones that I've experienced with are willing to invest in brand, and they're willing to rebrand, and they're willing to help these companies grow with a value creation plan. So it can be a challenging environment for some people because there's a need for speed and results. But if you're successful in a PE backed company, it opens up all kinds of opportunities.